You are not going to believe what just happened in the world of currencies. The Iraqi dinar has just shocked everyone by jumping to 3.83 dinars for $1. Yes, you heard that right. 3.83. For anyone who's been following this, those numbers are more than just an exchange rate. They represent a monumental moment in Iraq's economic comeback, something we haven't seen in decades. Investors, traders, and everyday people are all asking the same thing. What does this really mean, and how did we get here? Stick around, because we're about to break down exactly why the dinar just made this massive move. What's fueling it, and what it could mean for Iraq's economy and for anyone holding dinar right now? By the end of this video, you'll understand why this story is making headlines around the world, and why this moment might just open doors nobody saw coming. To really grasp how big this is, let's rewind a bit. Not too long ago, the Iraqi dinar was one of the weakest currencies on the planet. After the fall of Saddam Hussein's regime in 2003, Iraq plunged into years of war, instability, and chaos. The dinar's value crashed hard, and many people thought it would never bounce back. For more than 20 years, global investors wondered if Iraq could ever truly rebuild and stabilize. Some even called the dinar a lost cause. But today tells a very different story. The dinar isn't just recovering, it's climbing two levels that once seemed completely impossible. And when we say 3.83 to the dollar, we're not talking about rumors or online chatter. This is official headline-making news that's changing how the world looks at Iraq's financial future. So what's the real story behind this surge? Why is the dinar suddenly stronger than anyone expected? Well, a few major factors have been quietly building up behind the scenes. First and foremost, Iraq's oil industry is back on its feet and thriving. Oil is the backbone of Iraq's economy, and global buyers depend on it. The fact that oil exports are flowing smoothly again shows that international partners have serious confidence in Iraq's currency. Think about it, no company wants to pay billions in a currency they can't trust. The fact that they're now comfortable paying in dinars says a lot. It signals stability, trust, and long-term confidence. That trust alone is a huge part of why the dinar is gaining so much ground against the dollar. But oil isn't the whole story. Another major reason behind the dinar's rise is Iraq's determined push for real economic reform. For years, corruption and weak banks dragged the country down. Recently, however, the government has been tackling these problems, head-on modernizing banks, tightening financial regulations, and opening up to global trade. International partners have helped guide Iraq toward stronger policies and cleaner financial systems. These changes might not sound flashy, but they build real, tangible confidence. And when confidence grows, so does the demand for the currency. This isn't just speculation anymore. It's progress that's visible and measurable. The government is sending a clear signal. Iraq is ready to play on the world stage, and the exchange rate is proving it. Now let's talk about politics, because stability matters more than most people realize. For decades, Iraq was synonymous with unrest and uncertainty. That scared off investors and made the dinar incredibly risky. But today, things are calmer than they've been in a very long time. Sure, challenges still exist, but compared to the past, there's a much greater sense of order and predictability. Investors notice that. When they sense stability, they start moving money in. Political calm builds economic confidence, and confidence strengthens the currency. That's why we're seeing more international companies trading with Iraq and more investors willing to hold dinars. Stability breeds trust, and trust is money. So what does this all mean for the people living inside Iraq? For regular Iraqis, a stronger dinar is a bit of a mixed bag. On the plus side, imported products from food and clothes to electronics all become cheaper. Inflation could ease up, making daily life a little less expensive. But there's a flip side. Iraq's own exports might become pricier for foreign buyers. When a currency jumps too fast, exporters can take a hit. Since Iraq depends so heavily on oil exports, this balance is tricky. A strong dinar helps consumers, but it can pressure exporters. That's why the government and central bank will need to manage this very carefully to keep things stable. For international investors, this is both a thrilling and a risky time. Many people who held dinar for years are celebrating right now. This is the moment they've been waiting for. Caution is key. Currencies can be unpredictable, and quick jumps can sometimes lead to quick drops. This surge might face adjustments depending on oil prices, political developments, or global market shifts. Experts are reminding everyone to stay smart and be patient. Don't expect overnight riches. Pay close attention to how banks are handling exchanges, what fees they're charging, and what the real market rate looks like versus the official one. And here's a major clue behind this jump: the direct link between oil and exchange rates. Reports indicate that global oil buyers were waiting for Iraq's new rate before restarting full purchases. Now that the new rate is out, the oil is moving again. It's not just a coincidence. It's a powerful sign of real money in motion confidence. Every barrel exported now brings in stronger revenue, boosts national reserves, and backs the dinar's value even more. When oil money flows, Iraq's economy breathes in. That makes this surge both believable and potentially sustainable. But before we get too carried away, let's be realistic. Iraq still faces significant risks. The region can be unpredictable, global oil prices can crash, and political dynamics can shift overnight. If any of those things happen, the dinar could take a hit. For example, if oil prices fall sharply, Iraq's income drops, and that could weaken the dinar again. Or if political tensions rise, investor confidence could fade just as quickly as it appeared. That SY experts say the real test ISNT today, S number it, S how Iraq maintains this momentum over the long term. Lasting stability will be the true measure of this success. Another thing to keep in mind is how this rate actually plays out in real life. The official number you see on the news might not be exactly what you get at a bank or an exchange counter. Different rates often exist for different types of transactions: official, commercial, and street rates. They can vary quite a bit. Plus, banks and exchangers charge fees, so the cash you end up with might not perfectly match the headline rate. This has caused confusion in the past, and it could again. So anyone looking to exchange should only use legitimate, authorized banks and double-check everything before making a move. Let's just take a step back in history to appreciate this. In the early 2000s, the dinar was practically worthless. People needed thousands of dinars just to buy a single US dollar. Hyperinflation wiped out savings and crushed confidence. For years, Iraq relied heavily on US dollars for everyday trade. Now fast forward to today, where one dinar equals $3.83. That is an unbelievable turnaround. It's the kind of change investors have been dreaming of for over a decade. But history also teaches us to be cautious. The dinar has had wild ups and downs before, so even though today looks fantastic, the future still depends on how Iraq manages this new reality. A key hero in this story is Iraq's central bank. Over the last few years, they've worked non-stop to strengthen the currency by tightening policies, controlling inflation, and boosting foreign reserves. They've also been cleaning up the banking system to make it safer and more transparent. These reforms are clearly paying off. A strong, credible central bank gives a currency legitimacy, and that's exactly what's driving international respect for the dinar now. Without those tireless efforts, even a booming oil sector wouldn't have been enough to lift the rate this high. For businesses, this shift is massive. Importers can now bring in products more cheaply, which could mean better access to foreign goods for Iraqi consumers. On the flip side, Iraqi exporters might struggle if the dinar stays this strong, because their products will cost more abroad. It's a delicate balancing act, good for shoppers, but tricky for sellers. Companies and policymakers will need to keep a very close eye on that balance over the next few months to ensure the economy remains on a steady path. Thanks for sticking with us through this incredible financial story. If you found this breakdown helpful, please hit that like button and subscribe to our channel for more deep dives into the events shaping our world. We'd love to hear your thoughts in the comments below. See you next time.